What if you could buy a rundown property, renovate it, rent it out, refinance to pull almost all your cash back out, then repeat and do it all again with the same money? That's the BRRRR strategy. Let me show you exactly how the numbers work. BRRRR stands for buy, renovate, rent, refinance, repeat. It's how investors recycle one pile of capital into a growing portfolio instead of tying their cash up in a single deal. Here's the catch most people miss. It only works if your financing is built for it. Two different loans do two different jobs. Step 1 and 2, buy and renovate. You find a property that needs work. Say you buy it for $200,000 and put $50,000 into the rehab. That's $250,000 all in. A long-term mortgage won't touch a property in this condition. This is where a bridge or fix and flip loan comes in. Short-term financing built to fund the purchase and the renovation draws. And how much of that cost the loan covers, your leverage, comes down to your credit. Stronger credit means more funded and less cash out of your pocket to get in. Step 3, rent. The renovation's done. You place a tenant at $2,800 a month. Now, two things have changed. The property produces income, and because you improved it, it's worth more. After the work, it appraises at $350,000. That new higher value is the key that unlocks the next step. Step 4, refinance. And this is the step that makes it all work. You replace that short-term loan with a long-term DSCR loan. DSCR qualifies on the property's rent, not your personal income. At 75% of the new $350,000 value, that's a new loan of $262,500. Remember, you were all in for $250,000, so the refinance pays off everything you put in and hands you back about $12,500 on top. Your cash is out. The rental stays yours. And just like the purchase, your credit drives the refinance. Your score sets your LTV ceiling. Stronger credit, higher LTV, and more of your cash back in your pocket. Step 5, repeat. You walked away with your capital back, plus a property that cash flows every month. Now you take that same money and do it again. That's how investors scale, not by saving up for years between deals, but by recycling capital. And through the whole cycle, buying and refinancing, your credit decides how far your dollar stretches. The rent qualifies the deals. Your credit sizes them. At Imperial Capital Funding, we fund both sides of the BRRRR, the short-term loan to buy and renovate, and the DSCR loan to refinance. Get matched with funding at impcapfund.com.